When it comes to investing, one of the first things you need to ask yourself and determine is your risk tolerance. Are you young? Well, then you have a long runway and are likely able to take a little more risk, focusing more on maybe some growth stocks or faster growing dividend stocks. Are you older or nearing retirement, or just someone that doesn't like to take that much risk? Well, then you are going to focus on a different investing strategy. Today, we are going to look at two dividend greats that both operate within the healthcare sector. Those two stocks are AbbVie and Johnson Johnson. We will look into each company, look at the latest financials, look at their dividend, and of course, look at their valuation to determine which of these stocks is the better buy right now. So with that being said, let's get started. Hey everyone, Mark Rusin here. As always, I'm a CPA and not a financial advisor, so please perform your due diligence before investing in any stock or ETF mentioned in today's video. And before we begin, let me take a moment to thank today's sponsor, MooMoo. MooMoo has a lot of great tools available for investors of all different levels. And since we're speaking of dividend stocks, MooMoo provides a convenient dividend section where you can quickly and easily access a wide range of dividend stocks. By clicking on the Markets tab, you can easily locate featured lists, including the heat list and high dividend list. What's even more exciting is that MooMoo is currently hosting a paper trading competition, offering a chance to win $1,500 cash and receive 1 month of Benzinga Pro for free. Additionally, if you are a new user, you can open an account and deposit money in MooMoo and receive up to 15 free stocks. Just click the link down in the description below. Okay, now let's look at both AbbVie and Johnson Johnson to determine which stock is the better buy right now. As a disclosure, I own both of these stocks in my long-term dividend portfolio. But let's begin with company overview. AbbVie is a pharmaceutical company that develops, manufactures, and sells pharmaceutical drugs worldwide. AbbVie came about in 2012 when it was spun off from Abbott Labs. And now we look at AbbVie, it has a much higher market cap than its former parent company. The company is most known for having the #1 selling drug in the world, which is Humira. A few years back, Humira sales accounted for roughly 70% of total company sales. But since then, the company has diversified and added some great new products to their portfolio. In addition, a few years back, Humira also lost its international patent protection. And at the start of 2023, this year, they lost their US patent protection. So the days of leaning heavily on Humira are behind us. But it also leaves behind that one-trick pony, and it is a very different company than we see right now. When we look at the company's latest financials, we will see just how fast some of these other products are growing. They're not to the level of Humira yet, but they're moving in that direction. Now let's look at the company overview for Johnson Johnson. Johnson Johnson is a healthcare conglomerate that was founded back in 1886. So we are talking about a company that has been around for over 130 years. They have seen a lot in terms of different economic cycles during that period, but regardless, the company's products continue to be in demand and the company continues to innovate. It would be hard-pressed to find many households, at least here in the US, that do not have at least one Johnson Johnson consumer health product. The company currently operates within 3 different operating segments: the consumer health segment, the pharmaceutical segment, and the medtech segment, the last 2 being the faster growing segments. The consumer health segment will be spinning off, similar to how we saw with AbbVie spinning off from its parent company, Abbott Labs, a little over a decade ago. And they will become their own public company called Kenvue. The consumer health segment owns products such as Tylenol, Motrin, Zyrtec, Zarbee's, Aveeno, Neutrogena, Listerine, and many more. Once the consumer health segment spins out, legacy Johnson Johnson will be left with the faster growing segments. That is pharmaceutical and medtech, which is formerly medical device sales. Johnson Johnson's consumer health segment is going through some major lawsuits right now that are going all the way up to the Supreme Court regarding their talc baby powder that lawsuits are claiming caused ovarian cancer. This leaves a lot of uncertainty in the near term as this plays out. Now that we know more about the company itself, let's next take a look at their earnings results for 2022. Let's first begin with AbbVie. The company generated $58.1 billion in revenues, an increase of 3.3% on a reported basis and up 5.1% when you exclude foreign currency. Adjusted earnings per share was $13.77, an increase of 16.4%. AbbVie breaks out the results and their drugs by focus. Immunology is their largest focus, as this is where the primary drugs of Humira, Skyrizi, and Rinvoq all sit. Immunology on the year generated revenues of $28.9 billion. This made up roughly 50% of the company's revenues. The segment was up 14.4% on the year and up 16% when you take out foreign currency. Humira on the year accounted for $21.2 billion of sales, which was 36.5% of total sales. Sales growth on the year was just 2.6%, which we expect given the continued decline in international sales, which were down 22% on the year. Now let's look at Skyrizi and Rinvoq, which are expected to be the growth drivers moving forward. Will they be as successful as Humira? On their own, no, but together, yes, and even better. But AbbVie's strategy is different than it was a few years back. Early on, the company was that one-trick pony, with Humira sales accounting for a good majority of the business, but now the approach is much more diversified, a sum-of-the-parts approach if you must, which adds another level of safety for investors. Skyrizi on the year generated sales of $5.2 billion, which was an increase, you ready for this, of 75.7%, growing 80% here in the US and 50% internationally. Rinvoq generated sales of $2.5 billion, which was an increase of 53%. So the company believes that these two drugs can carry the torch moving forward. In fact, they believe that by 2027, total sales combined between these two will surpass peak levels of Humira. The next largest component within the business is oncology, which as a whole generated sales of $6.6 billion. So as you can see right there, immunology is the driver of the business. How that sector goes is how the business will go. In terms of operating income, AbbVie generated $18.1 billion, which was an increase of just 1.1% on the year. The main reason for the lack of increase was high SG&A costs. AbbVie will face pressure from biosimilars for Humira, one of which is already in the market, and another 9 are expected this year alone. However, as the CEO alluded to on the Q4 earnings call, the company has a strong pipeline, which now includes more than 80 programs across all development stages, further supporting the company's long-term growth outlook. Now let's turn our attention over to Johnson & Johnson and their results for 2022. In 2022, Johnson & Johnson reported revenues of nearly $95 billion, which was an increase of 1.3%. In terms of EPS, Johnson & Johnson reported adjusted earnings per share of $10.15 per share, which equated to an increase of 3.6% over prior year. The breakdown of sales between the US and international are quite close, with the US accounting for 51.1% of total sales. Next, let's take a look at the breakdown of sales by sector, looking at those three segments that we looked at. The consumer health segment generated $14.95 billion of total sales, which was a 0.5% decrease year over year. The pharmaceutical segment generated $52.6 billion, which was an increase of 1.7% year over year. And medtech generated $27.4 billion, good for an increase of just 1.4% year over year. On an adjusted level, which means taking out the foreign currency, all three segments actually grew in 22. It's interesting that we are comparing both of these companies against one another because they also came together to create a drug called Imbruvica, which had sales of $4.6 billion in 2022. Again, both AbbVie and Johnson & Johnson created this. Okay, now that we have seen how each company has done during 2022 and looked at a company overview, let's look forward to see where each company is going based on management expectations and analyst expectations. AbbVie put out their 23 guidance, which is calling for adjusted EPS of between $10.70 per share and $11.10 per share, which will be a sizable decrease from 2022, primarily due to the expected declines in Humira sales, offset by some gains in Skyrizi and Rinvoq. The company expects net revenues of $52 billion, expecting Skyrizi and Rinvoq to surpass $11 billion in combined sales on the year. In terms of Humira sales, they're expected to come in at $13.7 billion on the year. More generic options are released, which are leading to this big decline. In terms of free cash flow, the company expects to reach close to $19 billion in free cash flow on the year. Now let's take a look at guidance from Johnson & Johnson's management team. Adjusted operational sales are expected to grow by 4% to around $97.4 billion on the year. Adjusted EPS on the year is expected to land between $10.45 and $10.65 per share, which would represent a 4% increase from the midpoint. Next, let's take a look at valuation and see how management guidance compares to what analysts are expecting. Looking first at AbbVie, management is looking for EPS of $10.90 per share using the midpoint of the guidance, and analysts have an average estimate of $10.99 per share, which is within the management range. Using analyst expectations, this has shares of AbbVie currently trading at an earnings valuation of 14.5 times. Looking over to the right of this fast graphs chart, you can see that over the past 5 years, the company has an average earnings multiple of 10.8 times, suggesting shares are very overvalued right now just looking at this one multiple. But if we move things out over the past decade, shares have averaged 13.1 times, which is much more realistic. Now let's look at the fast graphs chart for Johnson & Johnson. As a reminder, management is looking for 2023 adjusted EPS of $10.55 per share using the midpoint of the range, and analysts have an average estimate of $10.51 per share, which is almost exactly the same as management. Using analyst expectations, shares of J&J are trading at an earnings multiple of 14.7 times, which again is interesting because we are talking about both stocks having almost the exact same earnings multiple. Let me show you a snippet from my investing dashboard. Looking here, you can see that Johnson & Johnson generated $17.2 billion in free cash flow in 2022, which was a 13% decline from the prior year. The majority of the decline was due to supply chain issues from the COVID pandemic that eventually caused inventory-related issues. Looking over at AbbVie, the company generated free cash flow of $24.2 billion, so $7 billion more than Johnson & Johnson on a fraction of the revenue. As such, on a price to free cash flow basis, AbbVie trades at 11.7 times compared to Johnson & Johnson trading at 24 times, substantially cheaper for AbbVie. But as we saw from the guidance section, AbbVie expects free cash flow to drop to around $19 billion in 2023, which would put the price to free cash flow multiple at 14.9 times, still well below that of Johnson & Johnson. So from a valuation perspective, the earnings multiple are actually quite the same. Johnson & Johnson is trading below their 5-year average, and AbbVie is a little above, but we've seen robust growth in AbbVie over the past few years. But these next 12 to 18 months are going to be game changers for both companies. Finally, let's look at the dividend. AbbVie pays an annual dividend of $5.92 per share, which equates to a dividend yield of 3.7%. Over the past 5 years, they have grown their dividend at an average annual rate of 17%, which is fantastic, and they have grown the dividend every year since going public. Johnson & Johnson, on the other hand, is much more of a mature business. In fact, they are a Dividend King, as they have increased their dividend for 60 consecutive years and counting. Johnson & Johnson pays an annual dividend of $4.52 per share, which equates to a dividend yield of 2.9%. And they have a 5-year dividend growth rate of 6%. So with AbbVie, you're not only getting a higher dividend yield, but you're also getting much faster dividend growth. With Johnson & Johnson, you're getting the consistency, them being a Dividend King, but a dividend yield that not only is lower, but growing at a much slower rate. So which of these healthcare stocks is the better buy right now? For me, I'm going to have to side, although I like both, I'm going to have to side with AbbVie. I call them the investors trifecta. I have growth potential, not these next 12 to 18 months, but normally, especially when Rinvoq and Skyrizi gets going again, you're going to get growth potential from the share price. You're getting a great dividend yield, almost at 4%, and you're getting strong dividend growth that we've seen over the past 5 years of 17%. So the headwinds are going to be these next 12 to 18 months as the growth levels in the sales are going to come down. But on the flip side, Johnson & Johnson's trading at a great valuations compared to their historical averages. Although both earnings multiples are trading very similar, Johnson & Johnson is below their 5 and 10-year average. So I hope you enjoyed the video. Down in the comments section, let me know, which do you prefer? Is it AbbVie or Johnson & Johnson right now? Thanks again for watching, and with that being said, we'll see you in the next video. Take care.